Good morning, everyone. Thanks for taking time out this morning to attend this conference call. From the management, we have today Mr. Rajeev Piramal, Executive Vice Chairman and Managing Director, and Mr. Nandan Piramal, Whole-time Director of the company. I would now like to hand over the call to the management to take us through the Q4 results. Over to you, gentlemen.
Thank you, Kunal. Good morning, everyone. Thank you for taking the time out to be on this call. I think that the format we follow will be the standard format. I will talk us through some of the overall operational issues through Q4, and also being a year-end, we will talk about the year last year. After that, I will ask Dinesh Jain, who's our Group CFO, to go talk us through the financial results, and then we will open it up for questions, and hopefully we can address all the questions that you have. So coming back to as far as the performance of the company in the last quarter in Q4, before we talk about Q4, I think it will be important to talk about a little bit about what the targets of the company or what the company is trying to achieve over the last year or so. Obviously, the company has our main focus has really been on two large areas, two operational areas. One has been obviously to continue the sales and execution of our existing projects, and the other part has been obviously to try and exit from some of our non-core land assets, to sell some of our land parcels in order to pay down the debt of the company or to improve the debt situation overall of the organization. So I think that we made some progress towards both ends in the last year, and I would say that at least we have now a lot of visibility going forward in terms of going further along this path to improve the overall situation in the company. So as far as our sales are concerned, if we look at it for the last in the last quarter, we did 140 crores of sales from our existing projects. We sold about 144,000 square feet. During the year, we did around 405,000 square feet of sales we sold across our projects. Our main contributor this year was Peninsula Heights in JP Nagar in Bangalore. We sold 138,000 square feet for the entire year. In Salsette 27, our project in Byculla, we sold 44,000 square feet. And also in some of our slower moving projects like Ashok Astoria, we were able to start exiting it. We sold 47,000 square feet over there. And Celestia Spaces in Mumbai, we sold 18,000 square feet in the last financial year. So our gross sales last year we did about 836 crores of gross sales. But when we made it up with cancellations and other things, we ended up with 673 crores of net sales in the last year. So while it is down from the previous year, it's still at 835 crores of gross sales, considering some of the difficulties that we faced post GST and RERA, particularly in the second and the third quarter of the last financial year. I think that we recovered easily well towards the end of the year to register some amount of sales. As far as land on the land transaction, the land sale is concerned, we completed 3 land transactions in the last year. So we had actually completed, if you recall, one transaction in the previous financial year where we had sold our land parcel to Hinjawadi to Godrej Properties for a consideration of roughly 160 odd crores. When we completed the land transaction, we received only some amount of the consideration. However, now in the last month or two, that transaction has been reached. We've reached complete financial closure of the transaction. The entire amount has now been received by the company. So we had 58 crores that was still due to come from that transaction, which was received in the last quarter. In addition to that, we had a couple of other smaller plots attached to this plot which we have sold and completed. That's about 15 odd crores. We sold some amenity plots as well. So the Hinjawadi land transaction is now complete, and we have received all our monies. In the last year, we concluded 3 other land transactions. So we sold our land in Pune, in Mamurli, which was a 60-acre parcel. We sold that to HDFC and Godrej jointly were the buyers. We received for realization of 226 crores. We had received 218 crores or 217 crores actually of that in the last financial year. And we received the last 9 crores as well. So that transaction, they have received full financial closure for that transaction as well. We had one investment in Bangalore and Madhepura, which was 30 crores. We've exited that investment, received the entire money for that. And then we sold our Ram Mansion property over there for a consideration of 177 crores. There was still 26 crores to be received, of which we have received a further 22 crores. So there's still 4 crores still left, but that transaction has largely been completed and concluded. So of the 3 land transactions that we did last year, we still have to receive, which was for a total of 433 crores. As of now, we have received 429 crores. We still have 4 crores to receive. So at least financial closure has happened as far as those are concerned. Also going forward on the land transaction front in this coming year, we have 2 term sheets or LOIs already signed. One for our land parcel in Tathawade, which is a 100 crore transaction, which is scheduled to be completed by the end of June. We also have been able to find a buyer for our land, 30-acre land that we have in potential in Hyderabad. We have closed the transaction there for 95 crores on outright sale. We expect to complete that transaction as well in the next, I think, 2 to 3 months. The document has been signed. As far as our Goa SEZ is concerned, we had mentioned that we are working on an exit over there with the Goa government. That largely is in place. Unfortunately, due to issues in Goa, that matter has been slightly delayed, but we expect that to be concluded reasonably soon. I would expect the next quarter or so as well. And finally, we are also on the brink of exiting our Nashik property, which is a 94-acre parcel that we have for consideration of 100 odd crores. That also we expect maybe to complete in this quarter, that will probably go into the Q2 of this year. So as far as land sales are concerned, we've completed these 3 transactions, received most of the consideration for that, and we still have another 4 transactions that we are working on, which will aggregate to these additional transactions aggregate to another about 375 odd crores. In addition to which, in this last quarter, we have received another 120 odd crores. So about 500 odd crores of cash flow we expect. Of the 500 crores, obviously 120 crores has already been accrued to us. There's still some balance. And the balance will happen as these transactions get over. As far as the Tathawade, potential Goa SEZ and Nashik transactions are concerned, these are all single short payments, so there is no payment schedule. So once the transaction is completed, the entire consideration shall be paid to the company. So that's our outlook as far as the land transaction is concerned. As far as sales are concerned for this year, I will ask Nandan to expand a little bit upon our sales plan and our approach for this year, but we have a reasonably confidence that we will be able to achieve our sales target for this year. And I'll just hand over to Nandan to maybe give a little bit of his sense. Nandan, for those of you who may not know, Nandan handles all the sales and marketing activities in Peninsular Land are under his oversight. So I'll ask him to talk a little bit about last year and the experiences that we had on the sales front, and then we can also talk about the year going forward. And post that, then I can just touch upon a little bit of the new projects as well that we have in the pipeline, specifically affordable housing or low-cost housing projects, what we call affordable luxury project in Address 1 in Gaunji and Pune, as well as phase 2 of Celestia spaces, which we hope to bring to market in this financial year. But firstly, I'll hand over to Nandan to talk about the sales, and then we'll talk a little bit about these new projects. So,
hi, thanks, Rajiv. Good morning, everyone. Just a quick overview on the sales achievements for last year. I think the numbers you all would have seen is 634 crores of sales in the previous year. That was down from the year before, but there were a couple of things that I want to highlight in this as achievements of last year. We did a number of 836 crores of gross sales. Why that's important and why I'm just mentioning it here is because that's the actual number of deals that were concluded in the previous year. Last year, because of a variety of reasons and internal drive to also clean up some of our receivables, we had done a few cancellations, I think, over what our average is. And so that there's a big gap between the gross and net number. But I think from a sales team, what's encouraging for us was that even in a year with a lot of upheaval and a lot of change in the external environment, we were still able to do 836 crores of gross sales. The way we calculate gross sales is all the sales done in the year minus any cancellations of sales done in this year. So the difference between gross and net is just the cancellations of previous years that have come into the system in this current year. So 836 crores of gross sales. I think the two major talking points from a sales point of view in real estate last year was the implementation of RERA and GST. I think RERA in the long run, we had a few, did have a short-term impact on the business, where for a couple of months, sales were closed till all the registrations were done of all the projects. I think that doesn't have a long-term impact. In fact, at Peninsula, we feel the implementation of the things like RERA will only help us and help the corporate sector in real estate, because it puts everyone on a level playing field, and I feel that that's where the brand value makes a difference, and I think customers will trust brands that have delivered in the past, and I think that in the long run is a help for us. I think the big impact in real estate last year, and especially in our segment, which is the higher end or the mid-higher end segment, where we're selling our average price of an apartment in Fawcett or Celestia or Peninsula Heights is anywhere between 4 to 7 crores. And in that segment, we've seen the impact of GST have the biggest, detrimental impact, because the cost of ownership has really jumped up by 10-12% overall. And in a market where prices over the last 18 to 24 months have been pretty much stagnant, from a customer point of view, my cost of ownership overnight increased by 10-12%. And I think that, just as an example, today, in a 5 crore agreement value, you will be paying anywhere between 90 lakhs to 1.1 crores of tax, which is GST plus stamp duty plus registration. So I think the absorption of that number took a little bit of time in the market. I think cost of ownership going up by this 10% or so made a big impact in a stagnant market where prices are not moving. That kind of became a price increase which was not going to the developer, but was going out in tax. And I think that absorption took a little bit of time in the market. But going forward, I think in Q4 we've seen that the impact of that, I think people have started to accept that as fait accompli, and they're moving forward now, and I think decisions are being made, and going forward, the outlook is very positive that these things which had short-term impact on the business in the long run and the medium term will only benefit the economy and the business, and so we have a very positive outlook for the current financial year in terms of our projects, in terms of sales and marketing. From a marketing front, which is not related to numbers, but just a quick update, we did a lot of campaigns. Rajiv said he's going to speak about Address One and the campaign that we did here. But in marketing, our focus is on disruption of the market, and some of the collaterals and some of the campaigns that we've been able to run have been very well reviewed in the marketing circles and spheres, and I think we will continue to have that visibility, and with our channel partners have that close working relationship, which will only help sales going forward. So that's just a quick overview on the sales and marketing and what we expect for the coming year.
Thanks, Aman. So just as I was saying earlier, just to talk a couple of things before we open up the questions. In the recent past, I think one of the big steps that we've made forward as an organization is also looking at newer opportunities. As we're looking at our land bank and we're looking at the rationalization of our land bank, as you can see, we have done a number of sales transactions, and we hope that by the end of, say, the second quarter of this year, we'll have completed almost 9 separate land transactions over the last 18 months. But the other part of this also is to look at within our land bank where we can start looking at the development of certain properties. So to that extent, to that end, there are two properties of ours that have been that are moving in from the kind of land holding situation to the development phase. So I think the first one of that is Address One, our affordable luxury project in Kaunjay. It's a 50-acre land parcel that we had held for some time, but we felt the time was right now finally to launch and to enter the affordable housing space. I think that we feel that given the overall emphasis on the sector, plus given what we felt was best use for this property as well in this location, the two things have come together quite well. So we did a very successful launch for the Address 1 in our first phase, which was, we had a total of 1,000 units. We brought 900 units to the market as part of the first phase. We have 5 typologies going from 1 bedroom to 3 bedroom apartments. And if there's more questions, we can get into the specifics, more specific of the project later in the call. But just right now to say that in our first phase of 900 odd units to be made available, we have already sold 700 and close to 750 units. The total value is 185 odd crores. The total potential in this project, so the first phase in terms of area was roughly close to around 5 lakh square feet. The total potential in this project is roughly about 3 million odd square feet. We'll have to see depending on FSI and things as we go forward. But at the moment, the first phase has been launched. The 5 lakh square feet reflects 1,000 units. Of those 1,000 units, as I said, we made 900 available for sale. Of those 900, we sold 750 units. So that's a good positive start for us. We hope to break ground on this project post the monsoon, and we expect to do a quick delivery on most of the buildings. It's 50 buildings, but they are ground plus 4. So the challenge will be, of course, to execute this volume, but we're confident that we have the team and the resources in place to do that. The second project that we will launch this year will be the second phase of Celestia Spaces. So we expect to be registered, the targets we are registered by close to the end of the year, December, January is what we are looking at. We have a 22% financial interest in this project. The total potential of this area is about 1.5 billion square feet. Our first phase will be a single building, which will roughly be 7.5 lakh square feet to start with, and this is at 7.5 lakh square feet to go beyond that. As far as this project is concerned, just to give a little update, originally this project was we had a development, a DM relationship with the butters, which was something that we agreed many years ago. However, we felt that given the changes in the market, that we have converted the DM into a kind of financial stake in the project. So we had already acquired a part stake earlier, and we've converted the DM into additional stake in the project. So as things stand, we have a 22% financial interest in this project. So that's the two new projects that you will see for us in the coming year. Other than that, the emphasis, like I said, continues to really clean up the balance sheet and put the company in a healthier position as we go forward. So with that, we will continue to execute on existing projects and scale on existing projects, continue on the land exit front, look at a couple of new projects, and we feel that these are some of the steps that we will take in the next 12 months, which will put the company in a much better situation or a much stronger situation than we are right now. Some of the so-called cleanup as far as our balance sheet is concerned, we've already started that process, which is reflected in some of the results. So I will hand over now to Dinesh Jain, our Group CFO, to talk you through the Q4 financial and the FY 2018 financials as well, and where he will explain a little bit about expand on some of the things that I've been talking about.
Good morning. This is Dinesh Jain here. I'll take you through the financials for the year ended March 18 on a revenue of 673 crores. Which mainly comprises of there is one land transaction which we have done during the year. We have reported a loss, but that loss essentially is because of the exceptional items of 180 crores. If you flip the page, we have given some of the details of this loss. Essentially, this is emanating from the Ind-AS related adjustments which we need to do as per the accounting standard. First is 63 crores Nasik land parcel which we are in the process of exiting. Mamurdi land is what we have sold to the HDFC and Godrej combined, which Rajiv touched upon. Then the other two loss, which is 18 crores and 99 crores, essentially pertains to Carmichael Residences, our South Mumbai project. As you know, this project has been there have been some issues around in terms of the approvals around this process, and which has deflated to some extent the sale price of this project. And the auditors, in consulting the auditors, we have taken a conscious call to do a impairment. Now let me explain it. It's an impairment really. It's not a write-off in that sense. I will go to the debt profile of the company, page 15. as you see, the debt has actually come down, but is not fully getting reflected. The reason being the inventory console level, the inventory has gone up. That is one of the significant reasons. But as Rajiv mentioned, some of the transactions which we are producing during the current year, we expect the overall debt to come down by another 500 crores during the year, and we expect to end the year 19 with a debt of about 1,600 crores.
I think that is
That's all from my side. I'm handing over the to Rajiv.
Okay, so I think that I hope that that gives you some idea in terms of the overall situation as far as the company is concerned. I'll open it up now to any questions, and we'll be happy to try our best to answer them.
Sure. Thank you very much, ladies and gentlemen. We will now begin with the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Before we take the first question, I would like to remind all the participants again, if you wish to ask a question, you may press star and 1 on your touchtone telephone. We take the next question from the line of Kunal Lakhan from Axis Capital. Please go ahead, sir.
Yeah, hi. Thanks for taking my question. Just wanted to understand the impact of the new DCR on our saleable area, especially of Byculla and Sewri projects.
Sure. As far as new DCR is concerned, given the fact that both these projects are very far in their development, we don't foresee any significant change as far as the saleable area is concerned in Celestia Spaces. Celestia Spaces, we are on a schedule to complete the project by December 19. So we are on. Sorry. As far as phase 2 is concerned, phase 2 as far as the new DCR is concerned. As far as the new DCR is concerned, we will explore and see how we can maximize our FSI. I think there's a challenge now because the additional FSI, where you can go up to, obviously, you can go up to 3 plus fungible and things like that. The fact is that all additional FSI comes at a cost. So there's a premium, and then there's TDR, and there's fungible, which also comes at a premium. So the thing is that you have to find the right balance between consuming up to FSI and the additional time and cost is associated with that. However, as things stand right now, when we look at phase 2, the 1.5 million square feet that we are projecting is as per the current DCR, as per the old source, so the DP 1991, not as per DCR 2034. So there may be a situation that the FSI may increase, but nonetheless, we are still exploring that option. We will see how that goes. As far as Saltset is concerned, again, Saltset, we have completed a large number of sales. We already have approval as per 2324, which is the public car parking regulation. So as far as the Saltset is concerned, we don't see any change at least happening with the quantum of the FSI. If we wanted to, we could have tried to get, because we're already getting additional FSI due to the parking lot. I think the only difference now would be that if we have the option of not doing public parking maybe, and then availing of the FSI to the new regulation, but that would mean significant redesign, go back to RERA, lots of other issues. So we are looking at all our options and exploring them all at this point in time. But as things stand right now, we don't foresee, at least for Saltset, any change as far as the overall area is concerned.
Okay, that's helpful. Secondly, on the debt side, this year we have seen some good collections versus last year. So 635 crores of collections we did, plus 400 crores of money we collected from the land monetization. However, the net debt is still has declined by say about 100 odd crores, and overall net debt still remains a little on the higher side. How should we look at net debt going forward with another like 300-400 crores of monetization expected this year?
So, as Dinesh mentioned about monetization going forward, we expect net debt levels to be around 1,600 crores by the end of the year. But as far as the last year is concerned, I'll ask Dinesh to just elaborate on that.
So I think we need to see if at the consolidated level, Kunal, the total inventory has gone up. The debt is down by about 100, which we said. So that makes up almost 300 crores. So, but we expect that this year, in terms of our collections, are expected to be fairly robust. Our internal estimate is much higher, but in terms of what we are expecting is about 1,400 crores collection. The construction development got about 500 crores. Realized another 500 crores from land sale, which will make about close to 2,000 crores of collection. So this should help the actually address the concern, and we are conscious of the debt level.
Sure. And one last one from my side. In terms of P&L, just wanted to understand what happened this quarter in terms of revenue recognition, because if I look at the pre-sales and I compare it versus last quarter, we have done higher pre-sales. However, the revenue has been little on the lower side. I understand the adjustments because of the impairment, but just wanted to understand why revenue recognition is slightly lower this quarter.
Hello. Solcet. Okay. In our main project is Solcet. We have still not hit the revenue recognition percentage.
Okay, and most of the pre-sales that we have seen has come from Solcet this quarter. Would that understanding be right?
In the last quarter, if you look at our overall area sold, actually, we've done around 50 odd crores worth of sales. The last quarter has come from Solcet. The thing with Solcet really, as far as revenue recognition is concerned, is that there were certain premiums that we felt would be payable in the last financial year, which would help us to reach the 25% threshold. However, government has come with a new policy that allows deferment of some of these premium payments, due to which we haven't hit the milestone, which is why it's not reflected in our P&L. But does this address your question, or is there something? Could you just again repeat the question? We can maybe address it again.
No, so last quarter we had seen some 235 crores of revenues, which were driven by pre-sales of 95 crores. So I'm assuming there's some land sales which would have contributed to the revenues. However, this quarter we have done better pre-sales, but in terms of overall revenues, we are much lower versus Q3. So just wanted to understand the disconnect there.
Hello. Bharat Sanghvi here. On this Celestia, most of the sale has happened into the last month of the year, wherein the 10% amount which has not been received before 31st of March, so wherein we are unable to recognize the revenue, but this will come into the first quarter of the current year.
Got it. This answers my question. Yeah. Thanks a lot.
Thank you.
That's it from my side. Thanks.
Thank you. I would like to remind all the participants again, if you have a question, you may press star and 1 on your touchtone telephone. A reminder to the participants, if you have a question, you may press star and 1 on your touchtone telephone. A reminder to the participants, if you have a question, you may press star then 1. Thank you. Well, that seemed to be the last question. I would now like to hand the floor over to the management for their closing comments.
So thank you once again for being part of this call. As I said to you earlier, I think that the last year has been a reasonably difficult one for the company, but we have made certain steps, positive steps forward, both in terms of our execution delivery of existing projects as well as the land exit. I think this year, the emphasis and the focus remains very much on our cash flows and managing our cash flows and continue to bring our debt down to more manageable levels. So as mentioned earlier, we have a lot of collections to be done, and we'll continue to execute and deliver on those projects. We launched a couple of new projects this year, and we'll also continue on the land exit. So we'll complete another 4 land transactions coming year. So I think that having achieved all of that, the company will continue to move in a more in a positive step forward. And I expect this year the company to be in a much healthier position at the end of this coming financial year than we were at the start of the last year. With that, thank you very much once again for your time.